Eat it up, turn them to vultures.
The culture.
Thank God for the culture. Thank God for the culture. Thank God for the culture.
Listen right now.
Greetings, everyone.
Good evening.
Hello, everybody.
What's up?
Welcome to another great episode of We Do It For The Culture Radio. And I am one of your hosts. I am Lover.
I am DJ Mizzle.
Mahogany Rose. And this is We Do It For The Culture Radio.
That's right. Welcome to another great episode of giving you guys great information that you can take from the show and use it in your everyday lifestyle. That's what we do here. We Do It For The Culture Radio.
Yes.
You know what I mean? We keep you informed.
That's it.
We keep you in the know. And we got something for you today.
Yes. Very, very good topic today.
What? It needs to be known.
Absolutely.
We're going to talk about life insurance
Yes.
in the Black community today. We're going to talk about why it's important to have it. We're going to talk about things you can do with it, whether it's living benefits or death benefits. We're going to show you how to utilize it for wealth. We're going to show you so many different angles with this life insurance. It's going to be very informative. So make sure you get with somebody. Tell them to check out the show. We're going to be talking about life insurance today right here on We Do It For The Culture Radio. So we're going to take a short break. And when we come back, we're going to introduce our guests. We got some lovely guests today. We got Mr. Ronnell Page and LaShonta Shelton. So we're going to be introducing them today. So get ready for a great show on life insurance. We'll be right back. When we come back, we're going straight in.
All right. Let's do it.
Be right back.
We do it for the culture radio. For the culture.
I was born to play. Culture. Eat it up, turn them to vultures.
Yes. Welcome back to We Do It for the Culture Radio, where our stories matter. And like I said earlier, we got a great show lined up for you guys today. We have some wonderful guests that we're going to be introducing as we discuss this life insurance thing because it needs to be discussed. And we are going to discuss it today. It is Life Insurance Awareness Month here in September. So, Ms. Mahogany Bowes, why don't you introduce our first guest?
Absolutely. Currently wears many hats. He has been licensed as an insurance agent and registered security representative for over a decade and has licensed dozens of people and served hundreds of clients in the financial service arena. As a devoted father of 4 and adored husband of Bianca Page, Ronell totally understands the importance of living a balanced life. He is currently one of the youngest regional vice presidents with Primerica. Sorry about that. Financial Services. In 2019, Ronell and Bianca ventured into the educational staffing arena. Today, Page and Associates Scholastic Staffing is the fastest growing agency of its kind in the tri-state area. He has also recently been appointed as youth minister. Ronell believes that through God, all things are possible. Community and counseling the youth. Ronell is quoted saying, "God can make a rough start an easy finish." Let's give a warm welcome to Ronell Page.
My man, Mr. Page is in the building.
Hello.
Mr. Page is in the building.
How are you? How are you?
Sir. Nice to see you, Mr. Page.
Yeah, good to see you as well. Good to see you as well. Thank you for having me.
Can't hear Mr. Page for some reason. Let me see it. We got you.
Okay. Can you hear me now?
Okay, there we go. We got you now, Mr. Page. We got you. How you doing, man?
I'm doing good. Can you hear me? Can you hear me now? Can you hear me?
Hey, give me 1 second here. Just checking my levels here. I'm gonna make sure you loud and clear, brother. Hold on 1 second.
Yeah. I can hear you well. Can you hear me?
There we go. We got you now. We got you now. We're gonna jump right in, man. So,
All right, yeah.
Okay. And I am going to introduce
Not today.
Queen, the lovely Miss Shelton. Now she is a native New Yorker. I'm gonna bust her chops a little bit for you guys. She's a native New Yorker, currently residing in Maryland and serves clients in various states. A graduate of Delaware State University, Grand Canyon grad, former educator in International Speakers Association, Black Authors Incorporated, Woman in Finance, NAACP, ACLU, and more. She does it all. She's been featured on numerous radio shows, blogs, articles, magazines, and speaking platforms. She's also a mentor and record-breaking producer within her company. She is managing insurance investment offices. She has them. Managing and insurance investment offices in Arizona, Washington State, California, Indiana, Illinois, New York, Delaware, Virginia, Pennsylvania, Delaware, and Maryland. Her goal is to stop crowdfunding for life insurance and shrink the wealth gap in disenfranchised communities. She's a mother of 3, friend of many, and lover of life. I think she's from Queens. Are you from Queens? Okay, hold on.
Sunday show.
Sundays.
Give us a moment. We got some background noise coming on our side.
I'm gonna let you guys pick. Instead, maybe. Let's see. It can't be that.
What? Give us a couple seconds here. Yeah. All right. Now we should be able to hear you guys. No issues.
Okay. So, Miss Shelton, can you hear us, Miss Shelton?
I can hear you loud and clear on my side.
Okay. We got Mr. Page. Okay, listen, we're gonna dive right in to life insurance here in the Black community. It seems to be an ongoing problem, and we have not been able to really find a solution to it. So we're gonna jump right in, Mr. Page. Mr. Page, how's everything? Everything good with you, man?
All is well, brother. All is well. I appreciate you for having us on, brothers and sister. I appreciate you. We're excited on our side to be able to take part and just share a little bit of the knowledge we've gained over the years. Can you hear me?
Okay, so now, Mr. Page, you've been doing this industry for quite some time. You've been in it for many years now, right?
It'll be 20 years in January.
20 years, and are you still in Delaware? You still got the Delaware location?
Yes, sir. We have the office, 2 locations in Wilmington, Delaware, 12th and Orange, 1201 and 1203 North Orange Street, right downtown. Yes, sir.
Okay, so let's dive right in real quick. Give us a little synopsis of the different products that people can be aware of, because some a lot of Black people don't even know about the different products. They just know life insurance. That's it. They don't know there's different ones that they can choose. Get into some of the different products that they can choose, Mr. Page.
Yeah, so just quick backdrop is, I was 18 years old when I came into the industry, and I came into the industry because my mother had just been diagnosed with cancer, and of course the fear of an untimely death was present. And we went out to start trying to get life insurance, and she was denied by literally every company because she was currently, going through chemo and radiation. So I got licensed at 18 years old and started studying insurances and different types. And, I realized the best time, of course, to get life insurance is when you're young and healthy. The challenge is that most people don't understand that there's the need for life insurance. So they wait until they're either sick or some type of need for it comes into place. They're all basically 2 different types of life insurance. You have cash value, type of policy that accumulates cash with inside the policy, and then you have a sort of term. There's many different variations of term. There's annual renewable term. There's 5-year renewable term. There's level term, decreasing term, increasing term. Many different types of term. Just like with cash value, also you have universal policies, whole life policies, flexible premium policies. There's different types. Basically, in a nutshell, one is just like vanilla ice cream. It's straight ice cream and straight insurance. You get what you pay for. You pay for it. You pass away. Your family gets that type of benefit. Or some other insurances like accidental death insurance, where they only pay out in the event of an accident. You have to die literally to the cause of an accident. So, if we're just talking about 2 different major types, maybe the cash value type and then the term type. The cash values can have many different types of backdrops, whether it be an investment account attached to it or an indexed annuity component attached to it. But one just has cash that accumulates, and the other one it's strictly term insurance.
Now, speaking about the accidental death insurance, now, I never want to discourage anyone from obtaining any type of insurance at all. But I'm gonna tell you right now, Mr. Page. Listen, man.
I see that look he giving us.
Mr. Page. In my 20 years, I've never seen. I'm just being honest. I've never seen anyone benefit from an accidental death. I've never seen one person benefit from an accidental death policy before. Have you?
I tell my clients the only time you take an accidental death policy is if it's free. If someone's giving it to you, and it just it's just extra insurance, but it cannot be the cornerstone of your insurance. You still should have an actual major policy on you and your family. The chance of a person dying of an accident is so minuscule, it's not even funny. And then when it goes into how the death certificate has to read the cause of your death being an accident in order for it to pay out, that's a whole nother gambit there. So in our situation, a lot of companies with group policies or job or with your job, like the state of Delaware, they usually give you a 5-year renewable term policy. If you leave that job, it converts into a universal life insurance policy and also an accidental death. A lot of times people will confuse the accidental death benefit for an actual true death benefit.
Yes,
and that's where,
I've seen that.
And that's where they get jammed up. My father, we just buried him 10 months ago, and he had an accidental death policy through Chrysler. That's where he worked for 33 years. And when he passed away, of course, of natural causes, because he was 73 years old, he thought all these years he was paying for a life insurance policy, but in actuality, for the last 50 years, he paid for an accidental death policy, and we got nothing out of it. Not $1.
I believe you. Miss Shelton, how you doing over there?
Hey, Miss Shelton.
Miss Shelton, can you hear us?
Miss LaShawn Shelton, this is Paige. How are you? Hey, you know that's my sister right there, right?
I don't know, but I know she got a bootleg computer. Miss Shelton, fix that bootleg computer over there.
We going off on people like that.
Hey, Miss Shelton, you may have to dial in through your cell phone. Take the link, open it up in your email from your cell phone. That's what I had to do.
Shit, we'll get it right. We'll get it right.
Well,
now, back to you again, Mr. Page, because you said something that you did mention in the first part. You didn't say something about universal policy. You mentioned the whole life and you mentioned the term, but you didn't really shed light on the universal, which is another form of permanent or a whole life policy.
Yeah. So remember, in the cash value policy breakdown, whole life is a marketed term for cash value. Universal is a cash value, and the term permanent basically means that it's not for a specific term. However, even in most whole life policies or universal policies, there is what they call a maturity date. That's the date in which that policy will mature. Most companies are age 100, some are 110. I think New York Life is the longest one. It's like 120. But there is a period of time in most even considered permanent policies where that policy will actually stop, and you will have to pull out the full value of cash value in that policy because they're not made to go for 120, 130, 140, 150 years. They all have a date inside the contract. So you always want to look at the contract and find out how much cash value are you accumulating if you have one of those. B, what is the maturity date of your policy? C, what are the penalties for accessing such cash if you have those type of policies? What we typically recommend on the front end, if a client does not have a policy at all, we don't typically recommend that a person go into a universal policy. We typically recommend that they get a level term policy. They get the highest coverage amount they can for the lowest premium. And then we teach them how to invest their money into either an annuity, if they want stability, an IRA, if they want tax benefits, a Roth IRA, if they want accessibility and tax benefits, and also the marketplace, whether they want investments like Ms. Shelton is prepared to talk about. So we take that approach is that when a child gets their first car, you don't sell them a Mercedes-Benz or a Jaguar or a Lamborghini. You want to get them a Honda or a Nissan, something that's going to get them A to B, and they understand the basic functionality. Most of my clients do not understand how their universal life insurance policy works. The verbiage is very convoluted, and it causes a lot of confusion upon death for the family members to decipher the differences between the cash values and the premiums and the death benefits, guaranteed, non-guaranteed, paid up additions and things like that. So again, it's a difference in opinion or concept, but the universal policies are sold often, and when they're sold to have people save money and also have insurance at the same time, absent an investment license or an investment broker that can actually do both of those things simultaneously.
Okay, so you don't basically you don't recommend a universal for someone with their first initial life insurance. Is that what you're saying?
Right. So if I have a client who already has a universal policy, I mean, there could be a situation where at that moment, that's the best thing for them. They could already have a health condition, or they age 20 years, or they're overweight, or they smoke cigarettes now, and it wouldn't make any sense to try to do some type of conversion because the cost they paid for that policy is a lost cost. It's a sunk cost. They can't get that back, and I might not be able to get them into a new policy anyway because of whatever factors may be in hand. So one, you never ever cancel your policy or replace your policy until you have another insurance contract that's better in every way before you cancel the policy. You never do that. You never do it based on a quote. You never do it based on a conversation with somebody who tells you your policy is not good. You never cancel unless it's like you don't quit your job until you got another one, that's in the bag. You know what I mean? It's the same scenario there. So on the front end, though, I believe we educate the consumer about insurance and investments. It's actually better to separate the two. You have insurance with a beneficiary, and then you have an investment with a beneficiary where the two are not dependent on one another. That's my personal philosophy.
Gotcha. Did you have a question, Ms.?
I'm just taking
Okay.
notes.
So my thing is, you have to explain, because for some reason, life insurance in the Black community is a lot of times it's not deemed as a necessity. It's deemed as more like a luxury as opposed to a necessity. But before I do, Miss Shelton, can you hear us, Miss Shelton? I think she's in the attic because she ain't getting good service over there.
LaShawn, you there?
But explain how important it is to educate our clients, like on the products, on not just the products, but on having life insurance in general. Because, like I said, I don't know. I know back, like I always say about, like back in the days, my mom and my grandmother and them, life insurance growing up in the household, it was like a necessity. It was just as important as any other bill in the house. It got paid every month, just like any other bill in the house. It was just as important. But this generation, they don't see life insurance as a necessity. It's not like any other bill in the house. So it's like, okay, it's like you basically have to either rob Peter to pay Paul, because it's not seen as something that's considered important. You know what I mean? It's not a necessity no more.
Right.
Not for our ethnic groups anyway.
No, you're 1,000% correct. You're 1,000% correct there. And one of the challenges with that is that back in the day, our insurance agent, typically, his name was Frank or John or Bill. This guy was a community guy. He was come around and collect deposit receipts from our grandma, and she would have an envelope, probably in the kitchen on the refrigerator, and she would put the money there throughout the month, and he would come by and pick up those premiums and then take them to the insurance company for her. So he was kind of like a member of the family. Mm-hmm. Now, typically, those policies, can you hear me?
Yeah,
I'm sorry. Typically, that person was like a member of the family. So because he was a member of the family, he talked to the family about needing insurance. And in the event if someone passed away, he would actually bring that death benefit to the family, and they would have insurance. And those policies typically were burial policies that made sure that the final expenses or the burial was taken care of. So it was every month there was a constant reinforcement of the need for insurance in the Black community but typically it wasn't by us; it was by an outside personnel coming in. Nowadays, those gentlemen, they're older. They were baby boomers. They retired. They passed away, and the new generation of insurance agent, they don't go out and do house calls. They don't go into the community. They don't reinforce grandma and the mom and the dad about the need for insurance. So it's kind of left up to us. And truthfully, life insurance it just isn't sexy. It's not something that you see on social media where it's like, oh man, I got this new life insurance policy. Oh my God. It's just not it's not a part of our culture. Life insurance basically by definition means you don't get any money until you die. So, Bitcoin, cryptocurrency, that's sexy. That means I can make money now. But, I ask people all the time, if you got $1 million in your Bitcoin account and you die, where does that $1 million in Bitcoin go? And you know what they say?
Don't know.
I don't know.
They don't know where it goes.
Yeah, I don't know. Because there's no slot on your Coinbase account where there wasn't, in the beginning, to put a beneficiary. They don't know your password to your daggone Coinbase. They can't get access to it.
Mm-hmm.
You know what I mean? So these are things that they're sexy, they're sold, money's being made, but no one's actually educating on leaving those funds to the next generation. So we have to figure out a way to make life insurance sexy again. As we were building our organization, our team, from the time I was 18 to about 30 years old, we did a pretty good job making life insurance sexy and the selling of life insurance sexy. But the purchasing of it still means, you know what? I'm going to die one day. And a lot of people just are not ready to face the fact that one day I'm actually going to die. So they put it off.
So that's where the taboo comes in. We're afraid to talk about it. We don't want to face it, basically.
Yeah, I mean, it's like if I was going around selling discounts on chemotherapy, I mean, how many people will buy it? You know what I mean? Like, who's going to buy it? You know what, bro? I got discounted heart surgeries. You buy it now, but when you get older, it's 50% off. People are like, bro, I'm cool. You know what I mean? But the chances are somebody in your family is going to have a heart something. Somebody's going to have cancer, but it's just a taboo. Why? I'd rather pay for a cruise to the Bahamas than worry about dying one day. It's not sexy. It's just, it's not appealing. Life insurance agents historically are older, guys, go ahead.
I said it's morbid. People don't want to talk about death like that, so.
Okay, we finally got Miss
I don't know
Miss
what
Shelton
was going on.
I told her
sorry.
get out the attic. You up in the attic, got no
Whatever.
reception up in there. You know
Can
what I
you
mean?
hear
That's
me
what
clear
happens
now?
watch this. That's what happens when you're
We
from
can hear
Brooklyn.
you.
Whatever, Paige. How are you, brother? I heard you.
What
gave
up,
me
Sean?
all
I've been shouting you out. I've been shouting you out for 10 minutes now.
I missed all of it, but you gotta do it all over again. No,
I was shouting. I said my sister. I gave a whole introduction about the school. You was just like stuck in the matrix over there.
Oh gosh, I appreciate you. And I heard you dropping some serious gems and jewels, and I really hope that that your audience was listening, because what he said is absolutely right. Life insurance is not appealing, but it's necessary. And most of the times when people need it, it's already too late.
Well, Miss Shelton, people from Brooklyn are usually kind of slow. Because you from Brooklyn?
I'm from Queens.
Did I tell you that? She hates when I do that. I had to tap their legs and like, watch this. She hates when I say she's from Brooklyn.
I hate it.
Right?
Yeah, that's something I heard. That's
Miss Shelton,
taboo talk right there.
Give us your introduction into life insurance. How did you get into this industry anyway?
Well, that's an amazing question. So, about 5 years ago, when I met Paige, I met Kevin, Kenny. I met a lot of really fantastic people, and I wasn't really ready. I didn't understand it. I didn't, as Paige was talking about the appeal, it wasn't sexy at the time. Selling waist trainers and diet tea was sexy, right? So I gave up insurance and went to learn about it to do that because it was fast money. I didn't realize the value and the ministry behind insurance. So move forward to COVID. Everybody who meant something to me passed away. My aunt passed away 10:35 p.m. on April 15th. My grandmother passed away 11:41 a.m. on the 17th of April. And then fast forward to November 1st, my soulmate, my son's father, he passed away unexpectedly. Like I'm talking like out of nowhere, clear blue sky.
Hmm.
And I said, this GoFundMe stuff is starting to really irk me. And though my family members and Salam didn't need a GoFundMe, it was just the fact that GoFundMe was so widely shared on social media that it began to irk me. So I did a symposium on how do we reacclimate ourselves back to society after COVID. And Kevin Washington was supposed to be my guest. So he said, listen, if you come back to Primerica and learn everything you need to learn, I'll be your guest. And the rest has been history. So I learned the craft, I studied it. And now when I go out there, my sole purpose is to make sure that I eradicate these crowd funds and make sure that people are properly protected so they have that generational wealth and close this wealth gap.
Gotcha. I don't want to do Operation Takeover. Did you guys have anything? Because I'm.
No, I'm just
Okay.
taking
I
it
mean,
all in.
Okay.
I had a couple questions, but I
Well-
think they've been answered already.
I
Shoot.
know, right? Even
Okay.
the
So check this out. Check this out, LaShawn.
Yes.
Now I was speaking to Brother Page about the importance of explaining the products to the client or the customer and educating them on the product. I'm gonna tell you the reason why. For me, I think that's important because I've had aunts that passed away. One this last January, and another one before that, a year and a half ago, and they died. They passed away, but they had these term policies that they both outlived.
Mhm.
Be it one was 90, one was probably was 94 when she passed away, and I mean it was 95 when she passed away. Both outlived their policies, but here's the thing I'm trying to get to. A lot of times when these salesmen would come to the houses and doing these presentations and they were selling these policies, they weren't letting the people know about what they had and how this policy can possibly expire on you. So here they are in their 90s, uneducated on what they have, thinking that they have life insurance. Oh, I got life
Yeah, I'm
insurance.
covered. I'm good.
Then when they pass away and we go to see what they got, only to find out, okay, boom, you don't have life insurance. Your policy expired 10, 15 years ago.
Mhm.
You've been without coverage for 10 to 15 years and you don't even know it. So could you expound on why it is important just to make sure that we educate these people on
Wow.
what they have and knowing the difference? Because a lot of people don't even know the
Yeah,
difference.
difference between term and whole.
Absolutely. That's a
And
great
even if-
question. So, and like term insurance is just pure insurance. It's just regular insurance, no bells and no whistles. And the reason why I wholeheartedly believe in term policies is because when you do it properly and you educate the individual, see that's the difference between a financial planner and an insurance agent. We educate our people as to what they're getting into. And term policies, ladies and gentlemen, is anywhere between 10, 15, 20, 25, 30, 35 years. So you have to let that consumer know, listen, in 20 years, this is going to expire. However, the reason why it's appealing and most necessary, even the gurus, Suze Orman, Dave Ramsey, Warren Buffett, they suggest term policies because you now have more liquidity to work with to get an investment that can trail the term at the same time simultaneously and accrue a lot of interest, and compounded interest. So by the time that policy expires, they won't need a policy because they'll be self-insured. Like that's the goal. No one should have to be on insurance their whole life because that agent is getting paid for their whole entire life. So what happens is when you give a person the education and knowing that the amount of money that you're going to save in this term policy, you invest that amount or that difference you would have paid with whole, and you put that thing in a daggone mutual fund. You put that in an investment. Let it compound interest. So that way, when those 10, 15, 20, 30, 35 years are over, they would have money. It bothers me that wasn't told to your aunts. And I'm so sorry that happened. And then someone may say, well, why not take a chance and just do whole life? And I'm going to tell you why. There's 3 issues that come with that. When someone sells you any type of cash value policy, especially, we're not going to get into the IULs yet, but with a whole life policy, here's what happens, ladies and gentlemen. You purchase the policy. The insurance agent's going to spray all the bells and whistles onto it. And then now you're like, I'm covered for my whole life. I'm good. But what they don't tell you is this. When you pass away, your loved ones is going to have to determine, do they want what they saved up all that time? Or do they want the death benefit? Most likely they're going to pick the death benefit because it's more. That money that they paid into that policy all their life, it goes back to the insurance company. That's not fair. And the family's waiting for that money, thinking that they're going to have that disposable income, and they don't. Second, if they just live in benefits, you have fun with your money while you're here. Okay, that's beautiful. But the question really is, for my intelligent people, when is it ever a good time to borrow your own money? The answer is never. Because when you borrow something, you have to pay it back with what?
Interest most time.
Yeah, so, but whose money is that?
It's my own money, right?
Now, we said that out loud. It makes no sense that I have to pay interest to get my money that I paid into my policy. And if I don't pay it back, they're going to get that money out, that death benefit. Not what I saved up, but the death benefit. You know, and if you try to be cute and not pay it back, they're going to say, oh, you have a $200,000 policy? You borrowed $50,000, never paid it back? Now we're giving your family $120 or $100, whatever it is, after the penalty. And let's just say you never borrowed that money. Like I said, they're going to have to pick and choose. So how fair is that? It really isn't fair at all. So I stand
Rudy.
on term.
Hey, Rudy, can I chime in, Rudy?
It's good. Chime in. Go ahead. Piggyback off of that, Mr. Page.
Hey, Rudy. So in a nutshell, right? We have to also understand that insurance is insurance, right? So if I drive a pretty nice car. I drive a nice SUV, and when I bought that car, I had to get insurance. When I bought that insurance, anyone who's going to be driving my vehicle or benefited from the purchase of that vehicle, I made sure they knew about my insurance and also knew where the insurance card was in case anything ever happened, right? So if my daughter's driving my car and a police officer pulls her over, where does she go to get the insurance card?
More than like the glove department, right?
More like the glove department, right? So a responsible purchaser of insurance make sure that anyone who could benefit from that policy knows about the policy, how to access the information, and how to utilize it in the event if it's ever needed. One of the challenges with our community is that mom buys an insurance policy and doesn't tell any of the children that actually will benefit about that policy. Henceforth, those children don't even know who to call when mom passes away because it was a secret the whole entire time. You know how Big Mama was. Her business was her business. Our business was her business too. So in this situation here, we're the benefactor, but we know nothing about the policy. Now, we know that in a car insurance policy, it expires every, how often? 6 months, 1 year?
Yeah.
So it has to renew every 6 months to a year. It's not something that someone has to tell us. We kind of know it. It's about that time, right? And we call and we renew it, or if something changes, we make the changes and updates to it. If I change from this SUV to a car, I take my SUV off, I add my car, and all insurances work that same exact way. Homeowners insurance as well. You sell your house, you cancel that policy. You buy a new house, you buy a new policy, right? It's the same exact way. But with life insurance, people tend to treat it like it's something that it's not. They think it's one of those things you can buy today and never have to make any changes or adjustments ever in life. So henceforth, mom or dad pays $100 a month for 60 years, and we think that nothing has changed over the course of that 60 years. So it kind of has to be made almost taboo to think that I'm going to buy a life insurance policy at age 20 and have the same needs from that same life insurance policy at age 40 or 50 or 60 or 70. It's something that the whole entire family should revisit. I'm going to say annually to see if the needs change, but definitely on a biannual basis every 2 years to see if there's anything that has changed. There should never be a situation where mom or dad passes away in their 70s, 80s, or 90s, and that's the first time the children ever have spoken to the agent or called the company or inquired about those policies. We just had to do better as a culture to educate on when you purchase something, check into it, follow up on it, make sure that the company is still in business. I mean, how many companies can you name that over the past 20 years have gone out of business? Can you imagine taking your Blockbuster card out of your wallet right now and trying to go get a movie? It wouldn't make any sense. So we got to make.
Yes, so that brings me to this point. Bring this question here: How have we gotten to this point where life insurance is something that people feel like they can pit off? How have we gotten to this point where they just feel like it's not something that's important? I can pit this off. I don't need it I can wait.
now.
Yeah. How have we gotten to that point? You know what I'm saying?
I feel good.
In my opinion, as a culture, we just suffer from immediate gratification. Remember, life insurance isn't just delayed gratification; it's gratification that you don't benefit from ever. So for me to pay into something that I don't know, that I know for a fact that I won't benefit from, I have to be a selfless individual. I literally have to be thinking about my legacy, the future, my children, my children's children, and most people, honestly, just are not that type of person. They are selfish by design. They have to be trained and conditioned to be selfless, to take money from what I'm doing today to put it into something to where I won't personally benefit from that action. And that has to be a mentality that we have to educate our people on and understand that generational wealth happens from the person who's living in this generation, putting money aside for a generation who is not here yet. And until we get that part taken care of, we'll never have any success in the life insurance or the investment realm, because most people want to make sure that they are good while they're living, and the people behind them will just have to figure it out like they figured it out.
Gotcha. We have a gentleman over here. Only thing I can see is a K. I mean, I'm sure it must be somebody, one of y'all people. So who is this? Is this
OGK Wash. OGK Wash.
K Wash. Does Mr. Watson have something he want to add before we go to our first break?
Hey, they pretty much covered it all. They pretty much covered it all. I'm just here giving them some support.
Gotcha. No problem at all. Listen, we're going to take our first break. When we come back in, we got a few more things we want to talk about when it comes to life insurance. We appreciate y'all for staying with us. We'll be right back.
Yes, sir.
Guess you wonder where I've been. I searched to find the love within. I came back to let you know. Got a thing for you, and I can't let go. My friends wonder what is wrong with me. Well, I'm in a daze from your love, you see. I came back to let you know. Got a thing for you, and I can't let go. Some people go around the world for love, and they may never find what they dream of. What you won't do for love. You tried everything, but you don't give up. In my world, only you make me do for love what I would not do. My friends wonder what is wrong with me. Well, I'm in a daze from your love, you see. I came back to let you know. Got a thing for you, and I can't let go. I only want the best, it's true. I can't believe the things I do for you. What you won't do for love. You've tried everything, but you won't give up. world, only you made me do for love what I would not do. Made me do for love what I would not do. Make me do for love what I would not do. Make me do for love what I would not do.
All right. Welcome back to the show. We do it for the culture radio where our stories matter. I'm your host, Lover.
I'm your host, Mizzle.
And Mahogany Rose, and this is
We Do It For The Culture Radio.
And we got some guest speakers. We got Mr. Sean Selton, my man, Ronell Page. They've given us some great information, great advice on what we can do with life insurance, with these policies. They tell us some do's and some don'ts. Mr. Page, I just want to say something off the last thing that you were saying about how a lot of times the kids don't know what their mom had or had in life insurance until they die. They never reached out to the agent. They never reached out. They never looked at the policy. They don't know nothing. It goes back to the story that I had, and I'm sure you know D. Reed, Barbara out in Delaware. I was at the barbershop with D. Reed one day, and going over, discussing him with the life insurance and everything. And one of the other barbers heard us talking about life insurance, about getting and everything, whatever. So after me and D. Reed got finished talking, the barber asked us about, asked us about life insurance, whatever. He told me that him and his wife was on hard times. She lost her job. He was out of work. He just started trying to do the barber thing to try to make some money. And he said his wife had a life insurance policy that her mother had got for her while she was young. You know what I mean? But they didn't know anything about life insurance. So I said, well, listen, man, when you go home, speak to your wife, tell her to pull that life insurance policy out, and give me a call, and we go over the life insurance so I can get an idea of what you guys have and tell you what you can do. And in a nutshell, they were sitting on, it was like $45,000 in cash value in that policy that they had no idea about. And they were, like I said, they were struggling for over 6 months, just trying to pay the bills, and didn't have any idea that, that this policy was sitting there with $45,000 or more in cash value that they were just sitting on, that they could have probably tapped into to try to help out their situation. Now, of course, you never want to encourage people to just go in there and touch that cash value for just anything. Just you really don't want to encourage them to take it at all. But in a situation like this, I'd let them know, no, hey, listen, I know you guys are struggling, you're going through a lot, whatever, and you've been, you're trying to cut hair to try to make ends meet. I said, but you guys are sitting on a nice little pretty penny. I said, you don't have to touch the whole thing. You could take out $10,000 or something like that, whatever, just to get you and your family back on your feet. But the whole thing I'm trying to say is that a lot of people don't even know what they have in a policy. Going back to what you were saying before we left, they never consulted with the agent. They never called the company. They don't know what they have and what they don't have. And that's something that we definitely need to start doing when it comes to life insurance, is educating the consumer and making sure that we give them the knowledge on what they have and what they don't have. You know what I'm saying?
Yeah, brother, I'm thinking, again, we're talking about insurance, right? Like when your daughter says, hey, Dad, do we have car insurance? You say, yeah. The next question is like, with who, right? Because if you need it, you got to know who to call. And that's a prime example there. Like, and depending on the situation, did you say the mother was already passed away or she had not passed away yet? In that situation that you just named, had the mother, the policy owner, was she still living? I'm sorry, I can't hear you. LaShawn, can you hear him?
I'm sorry. Again, yes, she was alive, yes. But it
Okay,
was just
gotcha.
like it's a situation where, like I said, they just didn't know.
Gotcha.
They had no
Understood.
knowledge of what they
Yeah.
had or what a life insurance can do. Because a lot of times we only talk about the death benefit.
Yeah.
Yeah.
You know, you were talking earlier. LaShawn was saying earlier, saying about the term policy, whatever. Oh, it's just no, it has no benefits. No, a lot of these policies does have living benefits that we need to
Yeah.
expound
So,
upon. You can't just think
so,
about
so,
the death benefit.
so this is one of the things that we always, like I said, we talked about. If a person like that mother there, she's definitely she's a senior in the community, a matriarch. She's probably uninsurable at this point in time anyway. So that's not a situation where you say, okay, mom, I'm gonna go ahead and convert that policy to a term policy because we probably can't insure her at that point in time. So now we got to figure out how to make the best out of what she currently has. But in best case scenario, if I meet with her when she's 35 years old, I don't sell her a cash value policy. I get her a max level term policy, guaranteed until age like 95 or something, and then I give her a Roth IRA to where she can put money in every single month. And what happens is with that Roth IRA, and it's sad to me that people in Delaware don't even know about a Roth IRA because it's named after a former politician here in Delaware. Like there's a bridge named the Roth Bridge. It went before Supreme Court just so we can have this be a thing. So with a Roth IRA, you can put money in after tax, just like in a cash value policy. That money grows tax deferred. In any event, if you need access to that money, you don't have to borrow it out. You can actually take that money out. And as a matter of fact, you can take the cost basis out without paying any tax on it. So when an insurance person sells you the fact that you're putting money into a life insurance policy to save money on taxes is kind of gimmicky because whenever you put post-tax money in anything, it's not taxed because you've already been taxed. So if someone says, I'm gonna give you a free candy bar that's free. Like you're not really giving it was already free. I didn't benefit. It was take one anyone. I'm not benefiting by you giving it to me. So in this situation, the Roth IRA partners up with a life insurance policy like perfectly. And then if a person has a retirement plan through work, let's say a 403B or 401k plan where they can, put $18,000 or $19,000 in there and get a full deduction from that. If there's a matching contribution with their job, they can actually put money in there, which will outdo any cash value policy that has ever been created because now you're getting a matching contribution from your job, but then you're also getting a tax deduction from the IRS. These are both things that you can't get through an insurance policy. So when you're sitting down with a client that's, I'm going to say, under age 50 or 60, and they're healthy, you should be looking at how to maximize not just their life insurance, but also their true cash value. A true cash value is not associated with a life insurance policy. Cash value is actually in a cash account that's actually growing and for the client and also saving the money in taxes. So, and that's where Sean was talking about advisement and actually sitting down with people and teaching the whole picture. That agent back in the day that sold all of our grandma's life insurance, he never took time out to teach mom about a Roth IRA or a traditional IRA. He never did. Therefore, we never learned about it. So if we think it's a bad thing that we don't have life insurance, imagine how bad it is that Black people don't have any money saved or invested. I mean, that's like 10 times worse than life insurance. So when you take those things together and you have people that are only saving money in a life insurance policy, it's kind of sad because now by default, people are thinking, I don't have any access to any money unless mama dies or daddy dies. Yeah, literally. So we just want to make sure that we hit on that because that's really key when it comes to insurance and the component of insurance.
Okay, I've heard you talk a lot about the Roth IRA. Now, can you just give the people a little bit of information here because I've heard a lot about the irrevocable trust, which is also a very valuable tool. Did you have a preference between the two, the irrevocable trust? Because I heard the irrevocable trust is a very good tool for where people, especially for if you try to give it to some kids or something like that. to have something when they get older, whatever, where they can't just go in there and can't be touched for only for certain reasons. Could you just talk about that for a quick minute?
Well, so remember, a trust is an entity in itself. Irrevocable or irrevocable. Irrevocable means that whoever you designate it to, it's that person, right? It goes that way. Like, so it's no longer mine. Just like an irrevocable beneficiary and life insurance policy, that you can't change it. You know, what I mean, everybody has to come together and agree to undo it. So if you make me your irrevocable beneficiary, you need my permission to unirrevocably make me your beneficiary. And in that sense, I'm not going to do that. Why would I do that? I'm going to be that forever. So when we're talking about an investment account or a tax deferred account, a irrevocable trust kind of it's not apples to apples, oranges to oranges. A trust is like one thing. It's like a vehicle that you can put monies in. Let's say like a shell. But inside that shell, you got different things. You can put real estate in an irrevocable trust. You can put a mutual fund, stocks in an irrevocable trust. You can put insurance policies. Beneficiaries can be made out to an irrevocable trust. So that's one sort of a entity that you're allocating those resources to. The actual Roth IRA itself is actually an account that gives you a tax benefit based on IRA guidelines that allows you to grow that money tax deferred. So you can reinvest your dividends and then actualize those proceeds when you're time to retire and not have to pay taxation on that money. That's the benefit to the Roth IRA. So if a person is looking to save money without maximum taxation, I'm going to go with the Roth IRA. They're looking to have accessibility to that money without extreme penalty. I'm going to go with the Roth IRA. And an irrevocable trust, that just means that you can, dictate who, when, where, and how. You can kind of do the same thing with a Coverdell or ESA account for a child where, you are the custodian on that money until that child is ready to go to school. They can use it for school-related purposes. There's different ways you can do it. But the bottom line is it's the separation of insurance from the savings. I understand why they created the whole life policy and the cash value policies is because most people are not investment licensed. Therefore, they cannot legally have conversations about investments. And because they can't, they can only sell a savings vehicle that's attached to an insurance policy. It's just by law, they can't talk to you about 401ks and 403bs and all these different things. You know what I mean? So that's why we kind of, when you're an insurance agent with an investment license, your conversation is a little different than one who does not have one at all.
Gotcha. Now, a quick question now. When you look at some of the obstacles that we face as agents, especially in the Black community, because other communities they don't have these problems. For some reason, it seems to be only our ethnic groups that has this problem.
Well, let me stop you there, right? Because in all honesty, the number one purchaser of the wrong type of insurance are Caucasians, right? They purchase more cash value of the worst sorts of cash value than we do. They're marketed to them.
I hear what you're saying, but my philosophy is some insurance is better than no insurance at all.
No. So what I'm saying is, you're right. So what I'm saying is that we in our community, we had lots of insurance growing up. Like my grandma had insurance. Your grandma had insurance. But what we're saying is that insurance that we had did not allow us to decrease that wealth gap. The other culture, they had insurance also, but they had a different type of insurance that allowed them to actually increase the wealth gap. So we're talking insurance educational month. Okay, it's better to have some insurance than none, but it's also better to have the right type versus that will benefit you and your family than the one who doesn't benefit you and your family. A pair of shoes is better than no shoes, but a pair of shoes that fits is a lot better than a pair of shoes that doesn't.
Okay, so I had a Muslim gentleman, talking to him about life insurance, and I remember him asking me. I told him about some of the obstacles I face, with selling a life insurance because I sell auto, home, renters, all that, and I said the only product that I literally have to sell, like literally try to sell to somebody, is the life product. Everything else, pretty much, it sells itself. Pretty much, you gotta have auto, you got own insurance, you gotta have auto auto, you gotta have auto insurance. You got a home, you gotta have home insurance. You gotta, I mean, so, but the only product that I literally have to sell and try to explain them and try to let people know that they should have it is the life insurance. He said, well, why? Why is that the case? He said, this is how we build our wealth. There's no way that we can do what we do without life insurance. We can't get these homes that we build. We can't build our communities. Everything that we do with life insurance. So why do you have trouble with your selling it? I said, no, listen, I don't know. So my question is, well, LaShawn, do you think it's a trust issue? She done went back to Brooklyn on me again. Do you think it's a trust issue? Do you think we have trust issues? Do Black people have problem with trust? Do they not trust the agents? Do they not trust the companies?
Hey, is this radio station, is this majority for us as brothers and sisters?
Yes.
Okay, just make sure we're clear. So I was told one time by a brother that the white man's water is wetter than the black man's water, and then the white man's Kool-Aid is sweeter than the black man's Kool-Aid. And in that sentence, he was saying is that it's not that they don't trust, is that they don't trust us. My grandma told me, if you're gonna buy something, if you're gonna give money to somebody, give it to a white man, not a black man. She was conditioned that way. The reason why you can sell us a car insurance policy is because someone and higher up of the chain told us that we have to have that. We were mandated that. The reason why we can buy a homeowner insurance or rental insurance policy is because the mortgage company tells us we have to have a homeowner insurance policy. The landlord says we have to have a rental policy. There just hasn't been a mandate yet to tell people who have an inherent slave mentality that we have to have a life insurance policy. So for the general public of us and our culture, we've been told what to do for generations. And unless someone of the opposite race mandates us to do it, we won't do it. And if you're a black man like yourself, right? So if a black man like you comes to me and tells me that this is good for me, in the back of my mind, I'm thinking, well, why didn't Master suggest it if it was good for me? And I'm being facetious in a bit, but I'm being facetious in a bit. But if I'm being true and actual, is that what benefit do they have to tell us that we should be properly insured? None at all. So when we come and tell them something that they've never heard from their teacher, from their counselor, from the librarian, from the politician, from the president of the United States, they're saying, well, who are you to tell me I need this when none of these people who are clearly smarter than you have never told me this? And it's sad, but it's sad, but it's true.
Okay, so if we had to say so, what are some things that people like myself, people like Ms. Shelton, what are some things that we can do where we can earn the trust of the people when it comes to this? And do you have any recommendations at all?
Tell the truth.
You can chime in too, Mr. What is his name? Mr.
Okay.
Washington.
Yeah, you got it. I'll tap in there a little bit. First of all, I love Paige, man. You talking about somebody that does so much for his community. I've never seen such a young man dig into his community like he does. So totally give him much respect. I've been in this industry for about 24 years, and my closing ratio probably about 95, 97%. And mostly is all about education to our people. They just have to understand the need for it. And if it gets to the point where it's a big objection, I'll ask them, do you love your family? And they're going to say yes. Well, if something happens to you, would you rather them be in a better situation, the same situation, or worse? So they're going to say better, or they're going to say the same. So God forbid something happens to you right now, John and Mary, what happens to your family? You got to put things in perspective, and they try to say they can't afford it. You got insurance on your phone. If something happens to you, would your family benefit from that insurance you're paying for your phone? You got cable? Would your family benefit from it if your cable is gone, if you die? No. So they got to understand the reason why they need it and how they can afford it. And most people are just not educated. That's why we need more people like us to teach more people about us, about why life insurance is so important and the need for it, opposed to them selling to buy insurance for those other things that they don't really need to have it. That's the cornerstone. That's the foundation of financial planning, is making sure your family is properly protected. God forbid something happens to you.
That's also the cornerstone of building, like the Muslim said, of building our communities and
Yeah.
building wealth as well. Now, is any reason why you think maybe the church doesn't, you know, they get involved with everything else? Why don't they invite people, agents, to come in and talk about life insurance more?
Some churches do.
They do.
I'm invited to churches quite often,
Yeah.
and I do a workshop for the churches, and I call it maximizing the 90. Right, because in the church they talk about tithing and they talk about the 10% that they want the congregation to give to church. But what happens to that 90% that's left over? So we pray about getting out of debt, we pray about financial blessings, but God gave us 90%. It says in Psalm 24, the world and everything in it belongs to God. He loves us so much that he's saying, here, you keep 90%. So once I teach the congregation how to handle that 90%, which is part of life insurance is included in that, along with investing, the pastors, they love it. I mean, they'll tell somebody else about me. So, and I'll just go to another church, but I don't have any challenges with getting into churches at all.
Good. Because of what you said previously, it just sounded all so simple. You would think that it would be so simple to
It's simple.
say,
So-
hey, you know, but for some reason it
Hey.
just doesn't work out that way.
Hey, Rudy, Kevin, he does a great job telling the truth. And when you ask me how can we gain trust, it's just telling the truth. Kevin says things that are so truthful and so real. Like, do you love your family? And you can literally go into most of our households, look around, and see things that they have no business having there, or shouldn't have purchased, or insuring that they can't afford, but yet they don't have any life insurance. But most agents, they're afraid to offend, so they kind of stay away from the truth. They don't tell them that. So, you know, we gain that trust by telling the truth. The Muslim faith, that they tell the truth to their people. Look, if you don't protect your family, sir, you're less of a man. You're an infidel, says the Quran, right? They're not afraid about offending a person for not setting up something for their family that's left behind. And that's where we have to come in and not be afraid that we're going to lose out on a sale by telling someone the truth. And the truth is, if you die today or tomorrow and you don't have enough money set aside or enough insurance set aside, your family is going to struggle. They're going to be worse off. That's the truth. And that's the bottom line. And we stay right there at that truth. And the children are at the table while we're saying it. The wife is at the table while we're saying it. There's no way to hide from it.
Absolutely. I went so far to one time after being with a client for about an hour, going over why we need life insurance, and they try to say they can't afford it. I went to their cabinets and started looking at all the name brand stuff that they have in their cabinets. So you got this Heinz ketchup, you got this Heinz mustard, right? When you can get some of this other stuff a lot cheaper, which you can save $2 a day, which is $30, $60 a month to get you insurance. And the wife was like, you know what, hon, this makes a lot of sense. We need to make a change because I'm home with the kids. If something happens to you, I don't know what I'm going to do. Lo and behold, they make those adjustments to make sure they get life insurance.
That's true.
What
People
do you
will.
do, Mr. Sean, when you face those challenges? When it comes to price is too expensive. What do you do when you face those obstacles?
You know, I go through that a lot, and I really believe that people will pay for what they want and beg for what they need. And I do the same thing. Kevin really, really worked with me to be able to ask those tough questions, you know, and I may say, well, it's
She's back in the attic.
Hey, LaShawn, get out the attic.
I'm not in that.
Hey, Kev, you know what?
Can you
She
hear me better
saved
now?
her money on her Wi-Fi and got more life insurance.
And invested the difference.
She using
you hear
her
me better?
neighbor's Wi-Fi.
I am
We
not.
got you now.
No.
We got you.
Okay.
Didn't go next
I
door.
was saying Kevin really worked with me well to be able to ask those tough questions. And if someone says I can't afford it, the first thing I do is a financial needs analysis to find out where their money is going. You know, we're one of the only companies that will give them a free financial needs analysis that really illustrates where their money is going and how it's going there. And I'm a firm believer that people will buy what they want and beg for what they need. So if someone's like, oh man, it's still too expensive, I'll ask them, well, how expensive will life be for your family if something were to happen to you and you're the breadwinner? And that usually gets that person to think a lot more. You know, if you think about it, we're in such a microwave society where people feel crowdfunding is a quicker and best way where they can save their own money and then have their family get something in the long run. We have to do a great job at letting them know, like, yes, see, is it going to benefit you right now? And yes, you may feel it's
Hey, she's gone again.
sure that they're better.
You're good. She back?
Can you hear me? Yeah.
In and out.
Make sure that the family understands in good position that they invest in them.
Yeah.
Okay, there's a question, Miss Mahogany Rose.
Yeah, this is in reference to expired insurances. Is there a grace period typically for a client for them to renew their policy if they aren't informed, if they like find out or whatever? If the company is in business, is there a grace period for them to renew?
Yes, they have a 30-day grace period.
30 days. Oh, wow.
Yeah. So typically the insurance company starts sending out notifications 3 months to 6 months prior to the policy expiring to notify the client that the policy is about to expire and give them an option to renew the contract. Simultaneously, the agent of record is also given information to reach out to that client so that they can also, get them renewed. It benefits the agent because, of course, it's insurance, so the agent will get paid another commission if the client does renew. But also, it benefits the client because they'll be able to maintain life insurance or avoid a super spike and an automated coverage increase. So that's another thing where it's like, if you know that you are the benefactor of a policy for mom or dad, please check the mail. Please open the letter. Please read the letter and ask questions. What does this mean? Most companies that are credible always send out information within 3 to 6 months of the policy about to end before it actually does.
And if companies change their name or merge with another company, do they inform the client before doing so?
They're supposed to. There's certain laws that talk about defunct insurance companies, to where if an insurance company goes defunct, the companies who split up the portfolio of those clientele are supposed to reach out and notify those clients that those companies have been absorbed or the names have been changed. That is also correct. And then also, when agents are reassigned, let's say a client list, those agents are supposed to reach out to those clients to notify them they are the new agents of records. It is still a business, so sometimes we don't have people that, dot all their I's and cross all their T's. So an agent may not reach out, but there usually is a letter that's sent out or an email if you send up and for that. But in this day and age, a lot of people set up auto emails, and what happens is those type of emails go to their junk mail or junk or their spam, and they never get it. So again, that's why if anyone's listening, please call your mom or your dad, your grandma, your grandpa, ask them who their insurance companies are, see if you can get your hands on those policies. If you don't know how to read them and analyze them, call one of us or get a licensed insurance agent like good brother here on a call so we can analyze it for you. Call the company and ask them all the questions that are prevalent to that policy to make sure everything is as what mom or dad thought they were paying for. That's very, very, very important.
I got a question from a Facebook viewer. She's asking, she says, are you able to get life insurance for a family member that wouldn't buy it for themselves? I'm not sure if she's talking about immediate or an uncle or aunt. I know before it used to be a time when you could just buy insurance on anybody, but is that can you get that? Just buy it on any family member now?
There has to be insurable interest. There has to be some form of insurable interest where that person is financially responsible for that individual. You just can't say, oh, you're my best friend, I'm getting a policy on you, or you're like my 15th cousin down the way, I could get a policy on you. But if there is some form of insurable interest, and of course a person knows about it, then yes.
Okay, that's a good thing right there. Do they have to know that you're getting life insurance? Because some people, they may feel like if I want to get insurance on my sister because she's irresponsible, I have to let my sister know that I'm getting life insurance on her because she might not like it. So what do you do in a situation like that?
You got to know. So just to make sure we're clear, I want to make sure we're answering the person's question correctly. In a policy, you have an owner of the policy, you have a payer of the policy, you have the insured, and you also have the beneficiary of the policy. Those people can be the same, except for the beneficiary. It can't be the same as the insured, but they also can be different. So, for instance, Rudy, I could not put a policy on you and own that policy, right? However, I could pay for a policy for you. So let's say, for instance, Rudy says, "I'm gonna go get a policy with Primerica Life Insurance Company, but I can't afford to pay the premium." So Rudy says, "I'll make my wife the beneficiary. I'm gonna be the insured, and I'm gonna be the owner." Right? I could send a check into Primerica every single month, and if I chose to, and pay that premium from Rudy. They're not going to send that check back. But if you pass away, that money's going to go to your wife, right? But legally, the owning, so you have to have insurable interest to own a policy on someone. And yes, they do have to know that you are putting insurance on them. The only people who do not have to know are your children. If they're your children and live in your house, you can put policy on them without them technically knowing, especially if they're under the age of 18. But if there's an adult, you can't just go ahead and put a policy on them without them knowing. And most information you need will be like social security number, date of birth, medical questions. I mean, it'd be kind of odd for a person to give you all that information like just out of the blue. And of course, if you obtain it illegally, that's a whole nother situation. But so definitely they need to know. So if you got a baby dad out there, yes, he has to know that you're putting the life insurance policy on him, even though you do have insurable interest in that child. He does have to know that you are putting a policy on him.
I didn't know that was a rule, because like I said, if I got a brother, like my brother had cancer, and if I'd have known that my brother was not going to take care of himself, do what he's supposed to be doing, and I wanted to get life insurance on him, whatever, you know what I mean? And I didn't, because before, like, I remember when my uncles were all alcoholics growing up, right? They were all alcoholics. And the guy next door to my grandmother, his name was Mr. Strickland. This dude was a genius. He knew when my uncles were alcoholics. That dude had a life insurance policy on about 3 or 4 of my uncles.
Dang.
He wasn't a genius, he was a crook.
Listen.
Hey, listen. Hey, look. He must have been. Y'all, you was in New York, right? You know how y'all New Yorkers are.
Yeah,
That's Bertie. That's Bert.
Don't do
That's
that,
Bert.
Paige. Don't do that.
Hey, look. That's Bert.
Now, you didn't have to have insurable interest back then, though.
Hey, listen, bro. Look, I don't know about that. All I know is, when I took my test 20 years ago, you had to have insurable interest. I think when Kevin took his 26 years ago, you had to have it. But what happens is it's a thin line between if they enforce it or not. You know what I mean? So I technically could submit it and I might get it approved, right? But what happens is that's why they have what's called an insurance commission, an insurance commissioner who's usually a former police officer who's going to investigate that claim. And if he finds out that you're putting insurance on neighbors, that you have no loss. See, the definition of insurance means that I will suffer a loss if that person dies. That's all insurance, right? I can't put insurance on your car, Rudy. Like if I don't have any ownership or any rights to your car, I can't just say, that's a nice BMW. I'm gonna put full coverage on there, and if Rudy crashes his car, I get $20,000. I mean that's just ridiculous, right? And that's the same way with life insurance, right? If I don't have any way to have a loss in this right here, if Mr. Strickland, if they owed Mr. Strickland money, then yes, he could have put life insurance on them. But if they're just his neighbors who get drunk and make loud noises, it's against the law. It's illegal.
Mr. Strickland knew that my uncles they had a short lifespan based on the way that they were drinking.
Scammer.
And every time one of them passed away, he got paid.
And I hope that the New York insurance commissioner is listening to this right now and opens up an investigation, because I would investigate him for murder. He might have poisoned them men. I don't know. That's crazy. You can't do that, people.
All right. Check this out, though.
And the insurance agent.
And he's the insurance.
Everybody going to jail.
Okay, check it out. My mom, right? Like my mom and my pops, they had never really had gotten divorced. You know what I mean? separated for over 30 years.
Oh, wow. Okay. Yeah.
But my pops now, whatever, you know what I mean? He likes to drink, whatever, he likes to indulge, whatever. And my mom was like, okay, I need to get life insurance on this dude, whatever, you know what I'm saying? But here's the thing. You know, she has all of his information. She doesn't need to contact him and say, I need your social security number, whatever case may be, whatever. But I'm like, nah, Ma Dukes, you can't do that. Back in the days, you could do that.
Yeah.
But she wants to get life insurance to my pops, but my pops are gonna be like, nah, no way, whatever. So I think in a situation like that, I mean, she should be able to still get life insurance on this man. You know what I mean? Even though he doesn't want to get it, want her to get it. You know what I'm saying?
Who's going to answer the medical questions?
That's a good question. Yeah, you stumped me.
Yeah.
I got you. I mean, think about it. I mean, she can't answer the medical questions for him. That's against the law. As a matter of fact, HIPAA is a federal crime. So she can't do it. No one can do it. And HIPAA has been around for almost 30 years now. So there never was a time where we could answer medical questions for another individual. So that means we would have to ask them, which means they would know that something's up. Why are you asking me all these questions about my health?
Yeah,
you know, so
sometimes some applications are simplified where there's like, you know, little to no question there at all, or some of them, whatever. And then they got some now where there's no medical at all.
Yeah,
there's no physical. I haven't seen one policy ever to where there's no questions.
No, that's what I mean. Yeah, no medical.
Right. So no physical for sure. But I mean, they're going to ask you, are you on hospice? You know, I mean, they're going to ask you certain questions to figure, because there has to be an underwriting of some sort done. If it's a real insurance policy that has intention to pay out, there has to be some form of underwriting that has to be done. If it's a policy where they're going to just return your premiums, then okay, yeah, well, they might not care because they're going to give you your premiums back after they flip all that money. But if they're going to pay it out, they're going to ask you at least, do you have cancer? Have you had a heart attack? You have blood pressure, diabetes? They might not ask for a physical. They may go by what you state. But by law, the only person who can answer those questions is the person we're putting insurance on. So that's just by law.
Gotcha. I believe DJ Miz had a question.
Yeah, along with that, I mean, you guys are talking about these scenarios, and that's I mean, it's something that we were looking into doing. Actually, my family was going to get together and try to put a policy on one of my brothers.
We're ready.
Siblings, without his consent, or knowing, I won't say consent, but without his knowing, because if we were to tell him, he'd probably try to do something crazy. Basically just trying to take care of his daughter. That's all we was trying to do, is just get him in a situation that if something were to happen to him, we'd be able to bury him and take care of his daughter. But I think you guys answered all of that. But I do have some another question aside of that. I was doing some research earlier today, and I saw that there was a study by Lerma and Life Happens. I don't know if you guys are familiar with those organizations.
Yes.
But they stated that 46% of African Americans are underinsured. And my question is, what is the best way to determine the amount of what's the right amount that a person would need? What do you got? How do you,
I got it.
Okay.
Again, you have to have some sort of financial needs analysis done. Like, we can't just say, oh, okay, you're about 5'5", let's give you $200,000. We can't close a wealth gap until we know that person's financial independence number. We can't have this wealth gap closed if we don't know exactly what that person needs. And we also have to make sure they can afford it. Because what good is it to give a person a policy to close that wealth gap? Because you're right, we're $275,000 away, between $275,000 and $400,000, depending on the community, away from our counterparts, right? That's what the numbers say. But we can't close that gap if we can't afford to get it and it lapse. You know, a lot of your audience talked about lapse and, you know, the policy cancels. A lot of times that happens because people, you know, remember when Big Mama used to say you biting off more than you can chew? Well, they're getting these large policies, but they have no idea whether they can afford it or not. So when you sit down with one of us, and we actually break down your finances piece by piece, section by section, it'll let you know exactly how much insurance you need. And it'll also tell you how much you can afford. And if you can't afford it, there's some calibrated adjustments that have to happen. You know, it may have to be not getting your nails done every week, bundles every week. You may not be able to, travel every month, but there has to be some sacrifices that will have to occur in order for that wealth gap to close. That's just the only way it's going to happen.
We can't hear you, good brother, or we can't hear you.
I was talking with my mouth full. My fault. Listen, we're gonna take our one last break, and then we're gonna come back in and close out the show. I got a few more questions I want to ask. Then we're gonna close out the show, but we'll be right back. Give us about 2 to 3 minutes, and we'll be right back. Okay, go ahead and get you some popcorn, eat you some soup, Lashawna. Fix your Wi-Fi, do something. We'll be right back.
I can't hear you.
I was just testing you to see if you was paying attention.
Yeah, I was like, is my Wi-Fi messed up again?
It was just a
Check it out.
test. It was just
We're
a test.
back.
We do it for the culture video where our stories matter.
Yes.
We've had a very enlightening show, very informative. Thanks to my boy Paige and Miss LaShawn. And what was the young man's name again?
Kevin Washington.
Kevin Washington, my man. We go back like LL Cool J headline. Yeah, we have a very enlightening show. It's been very informative. And you guys have been laying it down with some great information for the people to take,
Absolutely.
to go home with. They can now go home and check out their mamas and their grandparents' policies,
Their own policies.
their own policies, have a better idea, a better understanding on what to do or how to make a better difference. But I got a couple of quick questions before we leave out. One is, I know we always face the challenge of price. What are some of the other things that make it tougher for us to sell life insurance besides price? What do you think it is?
What I see, I think the disinformation that's out there, people selling dreams instead of real products. I also think that what I find that's infuriating to me is just people wanting to make money and not change lives and help people out. But the biggest obstacle that we can overcome is that crowdfunding, making sure people understand that, yeah, you may put Johnny in the ground or you may get mama's ashes, but that family's going to still suffer. I was taught by a gentleman by the name of Donald Whitworth. You ask people these following questions. Would you prefer someone give you a beautiful illustrated card from Hallmark with beautiful pleasantries inside? Would you prefer someone cooking food for you for a whole month, knowing that you're grieving? Would you want someone to give you a check for $5,000 that they got for GoFundMe and a big hug? Or would you want to see your family be able to grieve properly, but be able to go on with the legacy that you left them? And if that answer is your answer, then you definitely have to make sure that you take the price out of it and look at the logic behind it. That life insurance policy, inclusive with a beautiful Roth IRA or some form of investment, is doing push-ups in that drawer, waiting for that moment to come up, right? And then carry that family on. It's life insurance. It doesn't stop at the funeral. It begins at the funeral. And once people understand that and understand that their life is worth more than what they put a price tag on, I think life insurance and investments will have a better, sexier tone to it.
Gotcha. Did you want to add to that, Mr. Page? Anything you think that any challenges that we face other than cost or price on life insurance?
No, I think y'all did a great job. The cost is only a issue in the absence of value. As long as we express the value to the clientele, cost is never ever an issue. Our families are spending hundreds of dollars on Jordans, $1,000 on Yeezys, and never ever one of those policies do anything for your family when they die. So we just had to put a true value, tell the truth about what we're actually doing for families, and we won't have any issues whatsoever.
Gotcha. Now, I know LaShawn was saying earlier that when she gets with a client, that she has to really do a real analysis to determine what the cost is going to be. Okay, now when you go into these homes, you do these analysis, and you come up with a face amount that's astronomical to the client, whatever. And knowing that, what are you doing to say, well, listen, yeah, I would love to have $700. I would love to have $1 million worth of coverage to be able to cover my child's education and to be able to pay off the home and the cars. But there's no way I can afford this amount of insurance. What's the next avenue that you can take if a needs analysis is not going to do it?
That's an excellent question. And again, between Paige and Kevin really sitting down and show me the key concepts, there's ways to find money within their budget. I promise you there is. Like, Paige just said Yeezys and Gucci and, everything else, keeping up with the Joneses, Craigs, and the Macs. when we do that financial needs analysis, we go through everything, through entertainment, through extracurricular, through miscellaneous, and the essentials. If someone's paying $200 and $300 on cable, we can cut that down by $200 by having them streaming. That's $200 right there. You know, if someone is spending an exorbitant amount of money at dining out, let's help them, you know, let's teach them about how to get that financial thing down pat by giving them opportunities, you know, to learn how to dine in. You know, reduce the covers, because at the end of the day, a half a sandwich is better than no sandwich at all. Right? Would you rather that person have zero, or would you rather them to have half? Half is going to do more than none. So there's so many different ways that we can help them make these calibrated adjustments. And if it still comes to the point where they're like, I really don't have it, and we can't squeeze, you know, juice out that lemon, then we work with what we can, and then we offer them solutions. And a lot of times, you know, this isn't a shameless plug, but a lot of times people say, well, I want to do what you do, because what you do is helping other people. There's always ways to find income coming in. We can't determine our salaries, but you can determine your income coming in that household.
Gotcha. Mr. Page, do you have any other method of being able to determine the type of coverage or amount of insurance that our client needs when trying to get their insurance needs intact? Mr. Page, I know my mic ain't on mute right now. Let me find out you did the dip on me. How about you, Mr. Washington? Would you like to answer that question?
Yeah, we have something what we call like the dime theory, right? And you just spell the word dime. So the D stands for basically how much debt they have, because if they're married, they want to make sure they can eliminate the debt, right? If the I is for income, right? So what kind of income do you need there? You need to replace. So those are the main two things that we want to concentrate on. If you want to eliminate the debt that you don't want your spouse to be left with, and you want to how much income you need to replace, how much money you need to take care of all your other responsibilities as well, and what's your employment income. So now you can figure out how much you need to replace on in that part as well. So it's kind of like you figure out it's almost 10 times what they make on a monthly basis and what kind of coverage they actually need. And what LaShawn was saying, that if they can't afford at that particular point, and I heard you mention it earlier, it's always better to have something than nothing. And if they can start eliminating some things they want down the road, then you can get more insurance. You can always increase it down the road when you start freeing up some more money. One of the main easy ways to free up some money is showing them how to get their money up front. Right. But just you think about everything that LaShawn and Ronell Page said, and you just forget about it. The main reason that sometimes the other reason people don't get insurance is because they lied to so well that they think they're doing the right thing. If I was to tell you guys, there's two types of life insurances out there. One's cash value and one's term. Now, the cash value policy, you pay more, but you got some bells and whistles. Part of your money is going to this savings account you can borrow from, and the other part is going to take care of the death claim. Now, term insurance is cheaper. You get more coverage, but it's no bells and whistles. So when that term is over, 20, 30 years down the road, it's going away. And since it costs so little, there's no savings attached to it at all. So now that you're older, you got to buy more insurance, and it's going to cost you more money. Which one would you pick?
You know what they say about life insurance? They say it's like that old leaky roof. The longer you wait to get it fixed, the more expensive it's going to be.
But based on what I said, which one would you pick? Let me ask the young lady.
Miss Mahogany Rose.
Say that again.
Which one would you pick? Would you pick the one that you got some bells and whistles that you can build some cash in it, or would you buy the term that's going to go away, and now that you're older, you got to buy more coverage?
Oh, the bells and whistles.
Absolutely, right? So they lie so well they're saying the bells and whistles is the right one. But then if they tell you, if you borrow this money, you got to pay it back. And if you don't pay it back, then they're going to reduce it from your death claim. Not only that, when you pay it back, you got to pay interest on it. But whose money was it? It was your own. So when is it a good time to borrow your own money? Never. But they don't explain all that. All they doing explaining that it has some bells and whistles. When you can show them the difference and show them how to accumulate a lot more money, and people think they need life insurance forever, but you don't. You need life insurance for as long as you don't have enough money to take care of your financial responsibilities. And if I'm going to show you how to save and accumulate money, so by the time your kids are grown and you have a ton of money saved up, You won't need life insurance. I don't need life insurance anymore. My wife don't need life insurance because if something happens to either one of us, we saved enough money up to take care of the other person's responsibility. Same thing with my parents, 83 and 84 years old, don't carry life insurance because for the last 24 years, I've been showing them how to accumulate wealth. That makes sense?
Yeah.
Gotcha. Now we always say that the term doesn't have any bells and whistles, but we never really talk about some like term is grown over time, and it does give you some bells and whistles. It now gives you living benefits now that you can use. If you have if you're like in a coma or if you're in a hospital or something like if you have a disease or something like that, whatever, it would now pay for your hospital stay and other things now. So we don't a lot of times, we don't talk about those living benefits that comes with some of these policies. You know what I mean?
You're absolutely right. It's just going to reduce your death claim, but those things come into place, and a lot of people don't realize that. But at the end of the day, they want to know that they're going to have insurance for life. That's their main concern, and that's what the whole life agents or cash value agents tell you. You can rent insurance and buy term, or you can own a house and get this cash value policy that you're going to have forever. But the only reason people want you to have that whole life policy so you can pay for your whole life, which means they're going to get paid for your whole life.
Okay. I have 3 different ways of trying to assist and help a person to be able to afford life insurance. The first, of course, is always a needs analysis, where I'm taking account of everything that you got going on, your debt, education, your mortgage, everything. I'm taking all that into consideration when I do a needs analysis, right? And if I do a needs analysis and you determine, okay, well, listen, that may be a bit much for me, I'm going to my second formula. My second formula is I'm going to say, okay, well, how old is your youngest child, right? Okay, you tell me your youngest child is 10 years old, and what I'm going to say is, okay, well, let's make sure that we have your income coming in until that youngest child is at least 18 years old,
Okay.
right? So I'm going to take your salary, and I'm going to times it by 8. That's going to let me know that your salary is still coming in for 8 years until this child is 18 years old. That's my second formula of being able to try to get a formula for someone to be able to afford life insurance. If that doesn't work, and that's still too expensive, then I'm going to say, well, how much can you afford a month? And based on the amount that you tell me that you can afford a month, I'm going to tell you how much coverage you can get for that amount.
Okay.
Whatever. So those are my 3 different formulas of ways of trying to find a way to get a person some assurance that they can either afford or that they need. Did you guys have any objections with that at all? Mr. Washington, Ms. Sean?
I do not.
No, I don't. I mean, everyone has their methodology of it. If I may, I'm reading this book. This is not a plug for anyone because I ain't write it, but this Life Insurance Exposed really breaks down a lot. And what you said, what I heard, Calvin, was you're doing the FIND method where you're finding out what their financial obligations are, right? And what major expenses they may have. That could be the objection. Investments and assets owned, the need for their desired lifestyle and essential income and the protection needed. It sounds like that's what you're doing. But, really to encapsulate and answer what you're talking about most, it says that these are the main reasons why people look at you cross-eyed when you're trying to tell them about the policy, again, because that immediate gratification. One, they don't want to face the fact that everyone's going to die. We did talk about that. And it's the inevitable. We all have to go. Like, none of us want to go, right? It's like everybody want to go to heaven, but nobody want to die to get there, right? They don't benefit directly from it. We discussed that also, but showing the value. How do you want your family to remember you? What does your love letter look like when you leave it for them? People think it's expensive, but when you break it down and show them term, they're like, wait a minute. I can't tell you how many people have looked at me like, wait a minute, that's it? And I'm like, what did you think it was going to be? And they're like, I thought it could be like $500-600. I'm like, girl, no, this is what your FNA says, and this is what we're going to do. But also they feel it's complicated. They think it's another debt. They think that only older people want it, but how many people between the ages of 18 and like 32 have been dying lately? It's like some weird portal opened up, and they're dying young. Like Jesse Powell just died. He was 51. That's not old. I just turned 50, so I refuse to believe that that's old. And then people don't want to have people pushy.
Oh,
One thing I love is that I don't push people. I just teach them and help them. And a lot of other thing is people don't understand what's best for them. So what you just said really helps out. And I'm just glad that we have an opportunity to change people's lives. And sometimes there's zip codes just based on making really good decisions and financial decisions.
well, Miss Shelton, you are definitely old, but I just want to say that
Calvin, I'm gonna fight you.
You need us to hit them for you.
the mortality rate has definitely changed
Yes.
easily over the last, I could say, 15 to 20 years.
Yeah.
Used to be a time when you could probably say, okay, somebody's probably going to live to be at least 70, 80 years old. That's no longer the normal mortality rate now. I think the mortality rate now, I think if you get to 50 right now, you've done something.
I think there's two. Me personally, I think there's two mortality rates. You got the 20 to 30 or 18. I say 18 to 30.
That's dying?
Yeah.
You talking about rappers or something, man?
Just young people in general, not just the rappers, not just the rappers. But once you get to 30, you're good till about 50. Then once you hit 50, then that's that second mortality rate.
I've been seeing a lot of people pass away anywhere between that 40 mark lately. I'm talking about between 40 and easily 55. That's young. That's young.
It's young.
Yeah,
Yeah,
it is
yeah.
young.
When you knew that grandma and grandpa was gonna last till they was like 70, 80 years old.
Yep.
But now you lucky if you can get to 50 years old.
Yeah.
And that's how bad the mortality rate has changed
Right.
now. And I just want to say one other thing that we really didn't talk about a whole lot. That it's a product that some people may not agree with me on. It's the universal policy. And when you look at the ethnic group, the black community, when you look at the demographics that sometimes we are faced with, it's unfortunate that you have to find a solution that is going to work. And I find that the universal product works most for the demographics that I work with because of the flexibility that it offers. Now, the term, like I said, that term, like I said, if you don't pay, it's just like that whole life. It's gonna lapse. It's gonna cancel on you, right? But with that universal policy, which I usually try to steer people towards, if you like cash value, okay, I could probably get you cash value for a little bit less, whatever. But I'm giving you some flexibility.
Okay.
So now, with this universal policy, let's say you get around the holidays, November, Thanksgiving, you got Christmas going on, all these different holidays going on, and you can't afford to pay your life insurance, I'm going to say, okay, universal will probably be good for you. If you're someone who has a history of not paying your life insurance or a history of it lapsing, a universal may be good for you because a universal is going to give you at least up to 90 days before that policy will cancel on you.
Okay.
So if you're somebody who says, okay, 30, the holidays is here, I'm robbing Peter to play Paul. I got Thanksgiving, I got Christmas. I can't afford the life insurance right now. They're gonna give you 3 months to pay that off. And after 3 months, as long as you go back and continue paying your bill, your policy will still be enforced. Your policy will not cancel on you. The second thing is of the flexibility is sometimes we get a life insurance policy and we have a good job and we can say, you know what, I want $1 million of coverage. I want $500,000 of coverage. Your situation has changed. You either got laid off, fired, you changed jobs, you're not making as much. And you want to say, okay, you know what? I want to take that $500,000 policy and I want to go down to $250,000. You can do that with a universal policy.
Okay.
You can't do that with a term, and you can't do that with a regular permanent whole life policy. Or if you was only making $25,000 a year, and now you're making $75,000 or $80,000 a year, and you say, you know what? I had a $100,000 policy, but now I want to go up to $500,000. You can do that with a universal policy. You can't do that with a term or regular whole life policy. So the flexibility that it gives in that universal policy is the reason why I try to direct my demographics towards that, because for some reason we need that flexibility. Do you guys have any objection to that at all?
Calvin, because I love you so
Absolutely.
much,
Absolutely.
Yeah, I'm gonna let Kevin
Absolutely.
take this one. Go ahead,
Go ahead,
Kev.
give it to me. Give it to me. What you
Because
got?
That's a leaky
even
bucket of insurances. But go ahead, Kev.
when you saying is that you have flexibility to decrease it to 700,000, it's still gonna cost you more money because inside that universal policy, there's a term, and every time you're every year your cost basis goes up. So if you want to increase that to 750,000, if you paying $100 a month for 200,000, you're not gonna pay that same $100 a month for 750. So
Yeah,
it's
but
just
your income has increased too, though.
you could
That's why,
you
that's
could do.
why you're going. That's why you're moving your coverage up because now you're
So
making money.
you can still do that with a term, then you can still do the same situation with a term as long as you got a policy with that company. All you got to do is do a policy change to make that happen, but it's always going to cost you less. So come Thanksgiving, when you need some money, there's no way, never have been any case that insurance policy is going to give you the same rate of return as the global economy. So when you need that money in Thanksgiving, you got way more money outside of that insurance policy than you did. Then you had way more money outside the insurance policy than you have in that universal policy. There's no comparison. It's never going to compare. You can never show me a universal policy, a cash value policy that's going to outperform the economy. One, that investment that you have in a secondary account is not in the market. They call units, so it's really not an investment. It's called units, and they don't really have to cash that in. If you read the writing, they don't really have to pay you that, and for 6 months if they don't want to. They can't, because it's not redeemable.
So what I'm saying is that there is something for everyone. and what did we say? What did we say earlier? Some insurance is better than what?
Half a sandwich is better than
half
no
a
sandwich.
is better than no
Exactly.
sandwich.
So if you're gonna get that half a sandwich, you want to get that half a sandwich as little as you possibly can pay for it.
Gotcha.
You always want to have more and pay less. I don't know anybody want to pay more and get less.
You're right about that.
We didn't get a chance to finish over with Mr. Page, but do you guys have any closing remarks? Anything you want the audience to know before we close out the show? Either one of you, feel free to go ahead.
I'm not
at the end of the day,
I'm pretty sure.
Go ahead, Mr. Washington. She got stuck again. Go ahead.
That's great. Say, go ahead, RoboCop. Hey, no. So at the end of the day, man, we got to make sure we educate our people on how to build generational wealth. As African Americans, we're making more than we've ever made before. We're just not educated of how to build for that next generation. You can get to a point where you never ever going to spend all your money. And even if you're older, again, that half a sandwich is better than none. But once you learn it, you start teaching your children, and now they teaching their children. We still building generational wealth because of education. We're in a position to take care of our parents now because of what we've learned 24 years ago. Now you teach that next generation that, even if you might not get there, if they get there, they'll be in a much better position to take care of you, right? So that financial needs analysis, knowing what your financial independence number is, meaning you need to know how much money you need to have saved up to live the lifestyle that you want to live. If you don't know that number, then you don't know how much to put away on a monthly basis to get there. So we get to this retirement age and we want to retire at 55, 60, 65 years old. If it's not enough money saved up, you got one or two options. Either you're going to reduce your standard of living or you got to find a way to make some extra money. And what do most people do in our community? Huh?
I said, go back to work. Go ahead.
Exactly. That's what they do, right? So that's the sad piece right there. And one way we can correct that is do education and teaching them that the same money that they're already spending, they just need to spend it more wisely. I'm not saying get a second job. I'm not saying taking extra money out of your pocket. I'm just saying reorganize it, right? We got so many people looking for this income tax return, $5,000. Why are they getting back an income tax return? Because they've been bamboozled. They've been hoodwinked. The government is only giving you back a refund. The only reason is because you gave them too much money. Well, Kevin, I got to pay taxes. Yeah, you have to pay taxes, but you don't have to overpay taxes. So if you overpay them, they have to give you back a refund. So these people bragging about they got $5,000, $10,000 back in income tax return. If it's $10,000, that means you're overpaying by $800 every month. If it's $5,000, that means you're giving the government $400 extra every month for no reason at all. And people say they can't afford stuff. They just not educated. I'm gonna get off that soapbox because I get a little passionate about it.
Ooh-wee, you hit
He's
it in
right.
the head
He's
with that one.
absolutely right.
Yes, sir.
It's true.
And, what about you, Mr. LaShawn? You anything you want to leave with?
I'll just say the same way we value our cell phones, our homes, our car and jewelry, and spend top-notch dollar on it, we need to value ourselves and our family. Remember that life insurance policy is literally doing sit-ups in that drawer, waiting to carry the family the same way that person carried their family themselves, and understanding that, again, life insurance doesn't stop at the funeral. It begins after the funeral.
Awesome, awesome. You guys have been wonderful guests. We appreciate all your information, all your knowledge, all the jewels that you dropped. Oh, this is good. We appreciate that. Ms. Mahogany, do you guys have anything you want to say before we close out?
No, I just want to say thank you to the guest. I want to say thank you again for hanging out with us today. I got to give a plug for myself. For the business, Sands Mobile Entertainment. We're going to be out in Spout Springs this Saturday morning, starting at 8:00 for the Sentinel Run. We're going to be out there raising awareness for human trafficking. I'll be out there playing some music. So if you're in the Fayetteville, Spring Lake, Cameron area, come on out and support. You don't have to run, but there's going to be plenty of things going on, silent auction, some vendors out there, lots of good stuff. So come on out for that. Again, that's this Saturday, start at 8:00, 8 to 1 o'clock, the Sentinel Challenge. It's good cause. So come on out.
That's awesome.
Absolutely. You guys could have been anywhere in the world tonight, but you were on our show. So we thank you so very much for being so informative. Your Time to Shine is the name of my business. I do balloon garland, and I'm also a vocalist. So this weekend, I will be singing at a hair expo at the Embassy Hotel in Fayetteville. Thank you all for joining us today.
All right. You want to plug anything, Mr. Sean?
Heck yes, that's y'all plugging. First of all, sister, you're gorgeous. Absolutely beautiful. And I think what you guys are doing is amazing. I just want to invite any of your real estate friends. Invite all your real estate friends. I'm going to be hosting a Zoom on Friday, and that Zoom is teaching our real estate friends how they can get unlimited, uncapped referrals from us, as a way of just saying thank you for making sure that people are housed, during these trying times. And what I'm doing is partnering with real estate agents right now to just show them how they can really accentuate their income. And the other thing that I would love for you all to do is, if you know anyone that's looking for something that's super part-time without, banging the clock down, let them know to get with me. One of the things that we love doing is helping people earn additional $1,500 to $2,000 a month, basically in their spare time, helping other people with these very issues that we just spoke about.
Gotcha. But can I hold something? Mr. Washington, you got any plugs? Or you good?
Hey, yo, just one thing. This Thursday, tomorrow night, I'm doing a free money and business seminar. It's on Zoom. So if anybody wants to attend, or if you have some friends that want to learn some things about money, it's just from 6:30 to 7:30. They can just text me and I'll send them the link at 302-521-0730. That's 302-521-0730, a free money and business seminar.
And what day was that again?
That's tomorrow night, Thursday night, from
Tomorrow
6:30 to 7:30.
6:30, 7:30.
Gotcha. I'm on that. I want to be on that for sure.
Does she have a link?
You got a link, Ms. LaShawn, at all?
Yes, I'm actually going to tag you on it, if that's okay.
That's cool.
Absolutely.
Yeah, for sure. Thank you guys again. We do it for the Culture Radio, where our stories matter. Give you another great episode of some great information about life insurance. We appreciate you guys. And listen, if that's all, 5 minus 4.
That's 1.
1.
And we are out of here.
Love it.
Peace.
Bye, everybody.
Bye. Thank you.
Thank you for having us.
All right.
Thank you.